Hi, everyone. Welcome to Analyze Your Trade, episode number 44 for August 7th, 2018. We are broadcasting live on YouTube at 4:30 p.m. Eastern Time, but I am also posting all episodes of the show, of both Timing Research shows, as audio-only podcasts. So be sure to look them up on Spotify, iTunes, Stitcher, or wherever else you listen to podcasts. Today, we will be discussing your trade ideas, and over the last few days, about 40 people submitted up to 5 symbols each, and I have put the list together that we're going to be talking about today. You should see that on your screen while I'm talking now. My name is David Cosbetter. I'm the creator of TimingResearch.com, and I developed the show with Dean Jenkins of Follow Me Trades, and he is here to moderate today, so I'm going to go ahead and turn it over to him.
All right. Hey, David, thanks for putting everything together and for having me back again to moderate. I'm looking forward to it. And today it's just Larry and I. So all the important panelists are present today. And we're going to, I heard your comment that you post podcasts on various channels. So we're going to try and make some controversial statements, maybe even some political statements, and see if we can get you kicked off some of the social media channels. See how that works.
Sounds good.
We want to test their algorithm.
Yeah.
See what kind of filters they got running there. So again, it's Larry and I, and I've always enjoyed being on here with Larry. We've done it many times, but for those that don't know Larry, if you'd go ahead and introduce yourself real quick, your service, what you got going on, your approach to the market.
Well, again, thanks for having me. I always enjoy this this session. So thanks for having me here, Dean and David. Yeah, so I've got a site called PowerCycleTrading.com, and I've been actively trading for over 30 years. Started my trading career back in the 80s trading oil, and ended up with one of the largest oil trading companies in the world, ran their international trading desk for 10 years. So a lot of background in commodities and just, the markets in general. So I really enjoy the trading side, but I like, everything kind of centers around direction, which is what will be fun today. And then I like to take the trades based on options as much as possible, just for, leverage and risk management. So it'll be fun here today to look at some of these stocks and look at the direction and get some ideas. So appreciate being here again.
Okay, cool. And yeah, it's good to be here with you. I always appreciate your comments and input. It's you have a different analysis technique than I do, but we typically very much agree on direction and what's happening next on these things. So it's always cool to get confirmation on that. But I'm Dean Jenkins, founder of FollowMeTrades.com. Been trading for over 25 years. Started as a fundamental trader. Found that to be a frustrating endeavor, and about 10 years ago switched over to technical trading, and have been getting some pretty good success with that. I run a stock advisory service, live trading room, and some education and mentoring services to help folks learn how to trade and to take it to the next level if they've already been trading. So looking forward to this. We got about 15 symbols. We'll see how far we get. It might go a little faster with just 2 panelists, but we also may be able to go deep on some of these. And if we got something that look good, Larry said he prefers to trade with options, and so do I. So if we get some good setups, maybe we could also throw out what option contracts we would like on those.
Yeah, that'd be fun.
In addition to this, the chart direction and key levels there. All right, but the first one up here is ExxonMobil. XOM is one that folks want to look at. And so if you want to go first, Larry, you got your screen shared. Rock and roll on Exxon.
Yeah, so can everybody see? Okay, so there we go. Yeah, this one to me just there's too much resistance. Anyway, you can look here. It's sitting right on top of the 200-day moving average. So try to get above that. It's coming into this 382 retracement. You've got a cluster moving averages over it. So, you can see how it came off into the close as well. It's not one I'd be looking to do anything on, buy or sell. It's trying to get its footing, trying to get a little bit of a base going, but looks like it's going to have some kind of support right through here, about 79. Some pretty decent support, but it's got just a ton of overhead congestion and moving average resistance. So it really needs to first off clear this 382, and if it can't get through this level here, then it's going to probably pull back again. So I would just wait and see if it can establish a price above this 81.50, preferably really above 82 right here, which is a 50% retracement, and then go from there. I would not be doing anything right here on it right now.
Yeah, and I'm with you. I'm showing my screen. I got about a year and a half worth of data here, and this kind of chart is one I just really avoid. There's no trend. There's no order to it, and it goes up, it goes down, without any kind of probability or predictability. And since May, it's been in a pretty ragged channel, just moving erratically. I like the energy sector, and Larry and I were talking before the start here that we both do, but there's some great candidates to trade in energy, but Exxon ain't it. So I personally wouldn't touch it. I don't like it. I think there's way better things to put your capital in and get some better outcomes on.
Yeah, agree.
Yeah.
So save your money.
Save your money. Put it somewhere, where you got an edge. Next up, this is going to be an interesting Tesla. Apparently, Elon Musk is making noise that he thinks he should take the company private, and that caused a big jump today. We'll see where he thinks he's going to get that capital at their valuation. But what are your thoughts on Tesla here, Larry?
Well, it's going to be headline driven, and you can see this spike here. I mean, I don't know how, I would not definitely short it. It's got a lot of short interest on this stock, so he's really squeezing the shorts. So, if you wanted to take a shot at it for a short squeeze, I mean, it can definitely go a much, much higher, but not kind of the thing, my style of trading. But this definitely has potential to move higher because he's going to have the shorts really, really scared. So if you're just looking for targets here, we can use Fibonacci, but I would say if you're looking to put on a trade, I would definitely not go short. And this can definitely get this momentum going higher based off of, his talk about taking it private, et cetera. We don't know what's going to happen, but just that alone with the shorts that are in here could get squeezed easily. So next target up here to 397, you could be up there really fast. It had a huge move up today, up 10-11%. So this is a kind that if you're going to trade it, it's more of an intraday type of way to trade it. So I would look to trade. Actually, this would be a great one to trade intraday using options, because the option spreads are usually very tight. We could look here. Here you can see intraday right here. So here's just a 5-minute time frame, and this you can just see that I like to look at opening ranges, and you can see that once this thing did start moving, it moved really fast. And if you look at the options, this is one you can easily play, or not easily, nothing's easy, but you can play this intraday. If you look at the spreads here, let's just say here's the weekly options, 3 days to expiration. So you look at this series here, just, currently look where it went out at 379. Let's see what the spread, of course the market's closed, so the spreads may be kind of wide, but this one tends to have pretty tight spreads, but not right now. You can see 875.9, so it's 25-30 cents. But, a lot of times Tesla will have some pretty decent spreads, either, maybe 20 cents, something like that. So it might be one that I would actually consider just from an intraday basis. But I would definitely not want to short it.
Yeah, I'm with you. It's a headline-driven company. I like your term there. And, there's, in the short term, all price movement is driven, essentially by emotion. But there seems to be more intensity of emotion around Tesla, for sure. Just there's passions both directions for Tesla. Interesting. I'm looking at the September monthly contract. Well, look at the put open interest. That is staggering. That probably matches the huge short ratio that you talked about as well.
Yeah.
right? And you know that volume was probably what's driving the tight spread that you talked about. So it could be a day trading candidate. I'm not a day trader, because you got to be glued to your screen, man, for a long time and be ready to act fast. And I like a little more relaxed trading style. You know, trade primarily daily charts, maybe 60-minute, and put your trades on, set your limits, set your alerts, set your exits, and go do something fun. Trading's fun, but not for 8 hours a day.
Yeah, I agree.
Yeah. So, yeah, I don't, you know, I think you're right. Tesla's a good day trading stock, and not a, you know, my swing trading typically runs, you know, a couple of weeks to out to 6 weeks, and it's not a good candidate for that. It's too erratic. So I'm not in it. Not going to be in it. And that whole story about taking it private, you know, and I think he said that, you know, what was about 450 he priced it at, 450 a share to go private.
Yeah, I haven't heard yet, but yeah, so that alone, he likes to squeeze the shorts. He gets pleasure out of it. So, you know, he'll keep talking his book as much as he can to squeeze those people that are short. And he knows lots of them that are massively short. So Jim Chanos,
he likes to taunt them, you know.
Yeah, loves to taunt them.
It's
So
funny.
not a good place to be.
AMD. You know, I worked for Intel for several years. AMD was like, you know, I was in the Navy in the early '80s, and you know, the Soviets were the big threat then. And when I went to work at Intel, and AMD were the Russians. Right? They were the enemy.
Yeah.
But they've been doing pretty well, right? And they're posing a threat to their behemoth competitor, and on a few fronts, and they're on a pretty good run here. What do you think about AMD?
It looks pretty good. I don't have anything going on it, but this, you know, from the chart, it looks fine. You can see it. Here's Fibonacci. You've got clearing that 618, so that's a real positive step right there. We've got, you know, what I like to look at, momentum. We've got positive momentum, so I could see this easily getting back up to the next target would be that prior high, and then I could see it getting up here to 20. You know, that extension at 2076. So I think it looks fine for continuation to the upside.
Cool. I'm trying to get my drawing tools because there's a point to be made here on for me on on AMD. This is a classic Wave 5 Elliott wave. So I use a very simple, repeatable version of Elliott wave, and I'm going to draw the wave count here. This was 3. This move up. This was a 4 retracement, and then we had a target zone established, a Fibonacci extension target zone, 61.8 to 100% for Wave 5, and it's right in that target zone. So, you know, pretty orderly, predictable move, but it's there. And for me, you know, it sure could continue a bit more, but you know, once they're in the target zone, I go look for something to try and catch an early entry down here where that next impulsive wave is beginning. I don't like chasing, you know, a mature phase of a particular move. And this is pretty mature, so not for me at this stage on AMD. But it's cool to see a chart that conforms to a known pattern. I like that. It's just too late. Next is AVEO. I think this is a pharma thing, drug thing. Yeah. It had some promise, but I'll hold my comments. So what are you thinking there on
AVEO? Well, the first thing I see, I just opened this chart up, but the first thing I see is that you've got a massive amount of overhead resistance based on the moving averages. So, you know, it's a $2 stock. You know, not something that I would tend to look at, but you can see it's got some base here, but you've got a lot of overhead resistance. You've got the 21 EMA here, so 223 up here to 230. That's the 50 simple moving average. You've just got clusters of resistance, but it's not one I'd be probably jumping in to do anything on. It's not kind of, you know, as far as options, this would obviously just buy the shares, but I could, you know, see the charts moving up here to 230, but, you know, 15 cents higher. It's just, I don't know. It's not, it doesn't get me too excited, put it that way. I don't see any, I like to look at kind of a squeeze type setups, and I'm not seeing anything here. 60-minute, you might be able to take something. We drop down a 60-minute time frame.
While you're doing that, it's pretty funny. One of the things I train when I do my training courses, and you know, the specific patterns and setups I'm looking for, is I teach people you ought to be able to see the setup in seconds, and if you don't try and force it, man.
Yeah.
Like you're struggling to see if you can see something right now, and you know you didn't initially, right? If you have to,
yeah, I just see this resistance. It's not something I'd want to get into.
Yeah, yeah. And I know you're trying to provide some, you know, some analysis and guidance on it, but you know, you probably would have rejected that chart in seconds, right? After looking at it.
Exactly. I would have moved on to the next one.
Yeah, and that's it's you know, it's funny, you probably run into it too, that people seem to be fixated on particular instruments, and it's like, well, how do I trade AVEO? And I think the bigger question is, should you?
Yeah. Right? Why do you have to?
Right. With, you know, 6,000 stocks and probably close to that in ETFs, why not go find something that's super clear? Right?
Yeah, exactly. There's always another trade around the corner. There's plenty of them. So yeah, don't get trapped into one specific security that you know something about, and you're obsessed with it or whatever it might be.
Right. Love my iPhone, so I guess I better trade Apple. Well, maybe not. Right. And I see the exact same resistance that you're talking about. Of course, we're using different indicators, but the Ichimoku cloud is essentially is derived from something similar to moving averages, calculated differently, but they are moving averages, and they are long and short term. And then I got the 200 here, and I'm seeing the exact same overhead resistance. Here's the cloud, here's the 200, right? And to get a meaningful trend going, it's got to get up through all of that. So if it can, and if it takes out that prior high, then there may be some, you know, some airspace, but we're not there yet. So, you know, if it does really start to move and take out resistance, take out prior highs, you know, taking it from $3 to $4, that'd be fun, but we're nowhere close to that. So it ain't happening yet. So I've got that one on hold, not doing anything with it. So here's another emotional stock. So Facebook, big news yesterday, and I thought this would be bad news because it sounded creepy to me that Facebook wants to partner with big financial institutions and get some insight into, you know, how much money you got and what you spend it on.
Huh.
That just sounded, I thought that would tank based on that, and no, guess not. Who knows, right? Who knows how the market's going to respond? What are you thinking here on Facebook?
Well, you know, it got crushed. Obviously, everybody knows that, but now it's back above the 200, the 150. But it's going to be just a slow grind. I don't think you're going to get the hot money. There's not a lot of momentum right now. So if this is going to move up, it's just going to be a slow grind up, and you're going to have resistance, a lot of it just overhead. So again, this is one where there are other things that are better to trade. You know, why trade it if there's other stuff? So you can see all this price action right there. See all that?
Yeah.
That's huge resistance right where it's coming into. So, you know, 192, whatever. So, you know, find something else.
I know you're a technical guy. What did you think of that announcement about Facebook and, you know, they want to look into your checkbook?
I don't particularly like stuff like that. No. Yeah.
Yeah.
It's kind of, you know, totally, like you said, creepy. Get too much information on you, you know?
Yeah.
Too much. Big brother looking at everything you do.
Yeah, they already know too much, you know?
Yeah. So this will be key though. You can just see all that price, right? See all that price action. See how when you broke above this 193, 192.5, came up, stayed up, came down, tested, then took off to the new highs. So this would be some major resistance right through here. So this would actually be a good place to maybe look at if it gets up here and then stalls on a lower time frame to set up maybe a credit spread, a bear call credit spread, something like that. Possibility. Gets up in here, but you'd want to see the momentum start to subside because anything's possible. But there, like I said, there'd be other better things out there to trade than this one right now.
If you've ever ridden the tube in London, their subway system, they have, as you go to step, the doors open and you go to step onto the train, there's like this gap between the train and the platform, and this recording goes, mind the gap, mind the gap. And I always remember that because when there's huge gaps, I think it's important as traders to mind the gap, right? You want to be really careful, and there's quite often a gap fill after a huge drop like this one. It'll come fill, and a gap fill target is this Fibonacci 38.2 to 61.8, and it's just approaching that. And so I think your idea about watching, I think you were saying with the debit credit spread. The credit spread.
Bear call credit spread, maybe.
Bear call credit was to watch for reversal and potential, probability of going down after this degree of gap fill up here, right? And that may be, the early signs of a reversal. See if that develops and maybe take this thing down a few points.
Yeah, you can see. Let's see if there's much credit you could receive, but that might be something to look at. But you want to see it kind of start to stall, and then when it gets to that this area here, let me enlarge my chart.
Today's the first red bar in the up move, right? So
yeah, so I'd be looking right here, that 193, 194. Let's just see what the premiums look like. Well, next week you can't get, there's not a whole, let's see, the implied volatility is, the current implied volatility percentile is still pretty low, which is amazing considering it just got crushed so hard. So there's not a huge amount of premium. So if we were to do a out of the money credit spread, you'd want to let this thing push up here and then see if it starts stalling, and then sell something a little bit out of the money and see if you can, establish a $2.50 wide spread or something for where you can make 20 or 30%, something like that. That's kind of what you might be able to look at. So right now, for example, this would be probably looking for a delta of, let's see what kind of deltas we could get. You did a 22 delta, that'd be a 190 strike right in here. So a little bit, not where I'd want to be a little bit over that resistance, more likely like 195, right around there where that 50 simple moving average is. So you can see it here for next week. You can't get much, so you'd have to get, you'd have to go out at least another week out, and then let's see what 195 would be, like a 15 delta, and still can't get much credit. So it's just, sometimes they work, sometimes they don't. It's just not enough credit because the implied volatility is still fairly low, even with that getting crushed. So not much there.
Right. It's interesting that 195 level that you talk about is the exact midpoint of that gap fill fib ratio that I was.
Yeah.
Yeah. So it doesn't sound like either of us are beating a path over to trade Facebook at this moment either.
No.
We'll find one though here.
Huh? Yeah, let's see what IBM is next.
Yeah.
Let's see about that. It's got its problems too. Again, here's another one that, it's starting to move back up, but again, it's got a lot of overhead baggage. You know, it's got this 200-day moving average, 150-day moving average. Now it's above this cluster, so it's going to be sandwiched in here between 146 up to this 151. So, you know, this one actually might be one for an iron condor. You sell a bear call credit spread up in here, and then sell a bull put credit spread down in here, and just look for this thing to turn sideways. So directionally, I don't see a really this thing taken off. It's already had its earnings. Okay, so it's got this huge resistance. It's got some pretty decent support here. So I think it's going to probably just kind of churn sideways. So you probably could set up an iron condor possibly on that if you're looking for a trade idea.
Here you go. I do see something different happening on this chart than has been going on. There is an indication of a trend change. So, you know, for most of this year, it's been a series of lower lows, lower highs, lower lows, lower highs, definition of a downtrend, at least, you know, starting in April. And we do have now this little high, higher low, new high, higher low. If it can breach the 200 and get through this resistance, there may be a new trend forming. But you got to get there. It's not there yet. And, you know, it has broken through the cloud, which are some, you know, smaller moving average components. If it can get above the 200, 150, 128, it may have some room to run, but you got to wait. And it could absolutely stall and go sideways, like you were talking about, Larry. So not too excited about it yet. We're about halfway through the list, halfway through the time. Why don't we go ahead and share, each of us, an idea or two of, I think we haven't found one yet on the list that we were all excited about. We offered some analysis, but nothing really got it. Nothing had our hair on fire to go trade tomorrow at the open. What do you like right now, Larry?
Well, a couple that we already have on. I'll show you those, then I'll show you a couple potentials. One that we've been in for a while is NVIDIA, looking for it to move higher. It's got earnings in next week, so looking for this to move up to around possibly 260 this week. So, but this is one, if you're not in it, I would not chase it. But this one, we're looking for a push, you know, up into this area here, kind of a pre-earnings trend, and it's got some good momentum. It's started to get back above that 618. So that's one. Another one that we've been in for over a week was Nike, and that's starting to really churn and pop. So just some examples of what, you know, directionally starts trending, what looks good. So here's Nike. We got into this last week, you know, when it was coming into this 618 retracement, and then you can see it started popping through there. And typically when you get, to me, once you get over and above the 618 start to hold, then it just really gives you that door to that prior swing high. So this is one that looks good for, you know, to test, hit that, probably that prior high and possibly go into 82. So that's Nike. Now, one that looks potentially interesting here is Best Buy. Let's see here. Pull this up. And now Best Buy, we've got, this has potential. This had a couple different variations on squeezes that we like to look for, kind of a coil pattern, but looks poised to potentially move back up towards that prior spike high there at about 79. Could get up here to this area here. So you can see how it's pulled back, moved above the moving averages. Now it's back above that 618, now pushing into the 786. So this one has potential to move higher. It's got earnings, I believe, at the end of the month. So it could still kind of, also that can give it some catalyst going into earnings at the end of the month. So that's a possibility there for a directional trade to the upside. Here's another one, Restoration Hardware. Now this one is, this could get a pretty decent pop. The only problem with this is the options are pretty wide, the spreads. But this one, you can see how this thing has been just coiling sideways here. And this has potential to kind of have big moves. So it's had this big move down. It held. Now it's pushing back towards these highs. If this breaks out in this area here, this could have a pretty decent move back up. So that's another one to watch, Restoration Hardware. And those are the, let's see, did I miss anything else? I think that's about it, a few that we found here over the last day or so. One other one I was looking at, let me just take a look. Here's ADI. ADI doesn't look too bad either. It's starting to get back above these moving averages. You had that big sell-off, came down, pushing back above this 382. We've got, these, what we call the volatility type squeeze patterns setting up. So this one has potential to start moving again. It's got, next target would be up here to about 100, which would be that 618 retracement. So kind of looking at this one, this one's kind of got a little bit of interest to it. So those are a few that you could possibly look at.
All right, very cool. Thanks. I'm showing a chart here. IGT, this is International Game Tech. We took that short at 24.74 late last week. That's been a good one, and it's just about at the target, so too late to get in, but I wanted to show it. And we saw that bounce off the 200-day moving average. We got short here at this light blue line, 24.74. We've ridden it down about 10% in less than a week. That's a pretty nice one. And you got this overall down pattern: low, lower high, low, lower high, bounced off to 200, momentum turned negative. We went ahead and took that, and I'm pretty happy with that so far. Probably going to close it out. It's finding a bottom here, so we're going to close that and take our profit maybe tomorrow. It's funny you mentioned Best Buy. I was talking about that in the trading room this morning. One of our watch list items is Office Depot, and over the last couple of years, I prefer to go buy my computers at Office Depot rather than Best Buy. They have I just think, at least it may be a local thing, a store by store thing, but Best Buy, you stand in line just to get a question answered and check out and everything. They seem a little understaffed and service is slipping a little. Office Depot, man, they just nail it. They got the stuff you need, got good prices, and really helpful. So anyway, Office Depot's been crushed, obviously. It's a lower price, lower cap stock, fell from over $6 down to $2, but putting in a nice bottom, and big breakout today. If they can sustain that, I might be looking, I wouldn't mind taking it from $3 to $4. That's not a bad, 50% profit. And I don't trade exclusively low price, but I don't mind having them in the mix. Right, some of these can really pop and get you a good return pretty quick. So I like that. So Office Depot is a candidate that I'm watching, see if they can take out that prior high. And what was another one I wanted to share? Wyndham. Now it's earnings pre-market tomorrow, and we've got a nice longer-term pattern setting up on Wyndham, and not to be confused with Win. Right, this is Wyndham. Win is, of course, having a few problems. But there's a big move up. Here's a perfect Fibonacci correction into this retracement zone. And got some nice evidence of a new trend potentially starting. Got positive momentum, higher highs, higher lows. We do have the cloud overhead. We do have the 200 overhead. But if you were to get in, if we got good earnings and it starts, it doesn't get away from us, even if it failed at resistance, if you get in, say, at 46, $47 and it failed at 50, that'd be an okay trade, and it's got potential to go bigger. So Wyndham is one to watch tomorrow after earnings pre-market, and then see if there's a bullish trade there on WYND, Wyndham. Those are a couple ideas I'm looking at.
All right. Yeah, I was just looking at Alibaba here, man. It looks like it's teetering for a bigger move down, but I think it's got earnings coming up here, so it looks pretty ugly, though.
I was reading an article last week. So Jack Ma, they'd spun off originally Alipay and turned it into Ant Financial. And they said Ant Financial is not a bank, and they get to bypass all the regulations. But in terms of financial transactions, the dollar value of financial transactions, they're the biggest bank in the world right now. He's a smart guy.
Yeah, it's talking Visa was one I was starting to look at here. Visa is starting to look interesting as well, since we're talking a little potential financials. So this is another one that is worth watching, I think. And good thing the earnings have come and gone. So you can see it's starting to push back again. Here's that 618 starting to push into. So we can get over this 140. I like the looks here of Visa potentially back up to possibly that prior high if we can consolidate over this 140 level. So this is another one I'll be watching closely.
Interesting. You're going for your profit targets are pretty small, right? You're just looking for a high probability small move.
Yeah, but when you're using options, these are big moves.
Yeah, right.
Yeah. So when you're using options, I mean, let's just take, for example, if we were looking at it, doing a Visa trade here, let's just take a what if, and I would be. This looks actually pretty good. So let's just take a look at what we could look at doing. I'd probably look at, we're trading right here at 140. I'd be looking for a target here to 143, and then potentially 145. So even, that looks small, but when you look at this on an option trade, so the expected move, this would be about a 140 to 43, so $3 up. So we'd come over to our option chain. I'd probably come out to the August 24 series here, gives you $4 up expected move. So you easily, potentially, theoretically get to that 143, and let's just see what the strikes look like. The other great thing is the strikes are dollar wide, so you can get this trade set up really low risk because you've got these dollar spreads. So might look at something like could look at maybe a 140 or even a 141. I like to get a little bit out of the money because then if you get it right, you're going to get some really nice leverage. So could look at a 141, 143. That's just a $2 wide spread, or you could look at a 141, 144. So let's see what that would look like. So if you were to do that here, good spreads, tight. So 141, 143 right here. So $73, right? That's your max risk. $127 would be your theoretical max profit. And, just little trades like this can add up, and you've got very low risk on the trade. And then you can also, I like to always have a game plan for hedging. So that's not quite 2 to 1, but that's a possibility to do something like that. And then, you can then kind of gauge where your profit would be. Let's say you get a big pop and it gets to 143 real fast. So we could come in here to our analytics and we could look down to Friday or so. Let's say we get a pop up to 143. This would be up $50 on a risk of 73. So, just little things like that can add up, and your risk is real low.
That's pretty interesting. We're different traders. We got different approaches. I'm just running a quick look here at my approach to it, and I'm trying to set this up to do a quick analysis on it. So if I thought Visa was going to 143, I'm trying to get my analyze screen up. I don't want to fumble too much. And this newer trade station here is where is it? Come on. Well, anyway, when I got a directional trade, my deal is to go one-sided, high delta, deep in the money, and try to capitalize on that move with a really big gain, right? If you got a delta of 80 and it does go up $3, you're going to make a lot of money. And you can set an exit and control your risk that way. They got a cool little P&L graph, but I wasn't able to pull it up quickly. Anyway, cool idea.
Yeah, so here we could go out to October, something like that.
Yeah.
Delta 80 by the 130, 1205, and your theta decay is not too bad, because it's such a big delta. So if this was to go up to 143, you know, this would be up $278 if this was to just really take off, you know, by the end of the week, or let's even go out to the end of next week. And if it was to hit that target 143 doing it this way, you'd be up $202, you know, on that delta 80 in the money call.
So if it goes the wrong way, you can bail and take a small loss.
Right. So anyway, just another way to play it. Yeah.
Yeah. Interesting. Well, we can also get back to the list. CDE was the next one.
Let's take a look. CDE.
Coeur.
Wow.
Coeur Mining. Out there in Coeur d'Alene. Is that why it's COEUR? Yeah. Go ahead first.
Well, this thing's really broken down. Let's take a look here. Wow. This sucker's looking pretty grim. You can just see this is a weekly chart. And, you know, this one is, you get a little separation here under $6, and this sucker's got a lot of room down. This looks like a potentially great short. You know, I mean, if you just put it out to the monthly, this thing is.
I mean, it's been channeling for the entire year, and it just broke it.
Look at that. This has major potential to the downside. This is what we call another squeeze on a monthly. This triggers. This looks really worth taking a shot to the downside. So you get a move here. This breaks here. You can see it's right there on that support, which is broken 658. Now it's coming into about $6. The next major kind of support area is right down in here, about, you know, 350, whatever. So it's good. You know, went out at, where to go out at 635. So $6 down to 3. That's a pretty good move on that small stock. This is definitely one that I would be looking for short on. I don't know. You check the short interest. I don't know anything about this company, but doesn't look too good.
Yeah, I don't know either. I'm gonna look it up real quick.
Yeah. And do they have options? Which, I mean, to short this, you'd have to borrow the shares. I guess you could short it. They probably don't have options. Let's take a look. They might have options. They do have options. Wow.
Yeah, and they got some pretty decent open interest on it too. It's not bad.
So this one could easily, you know, get down to maybe $4. So $2 down, go out to this Jan 20. You'd have to go down to either, wow. No, I don't like going that far out, but maybe out to the Jan 18 here. Let's see what it looks like. Short
ratio on it's 2.48, so it's not bad.
Not bad. So you can buy the $6 puts for 50 cents.
And you could really be protected. I like going puts on a short. You know, you're really protected that way.
Yeah. I'd even like, you could buy those $5 puts for 20, you know, probably 15 cents. So that'd be your risk. And let's say you got into that for 15 cents, but just take a look here. If you got in for 20, and so that's the max you lose is $20 or $15 per spread. And if it hits your target down here at that support at $4, you know, this.
You hit a home run, man.
Yeah, I think it would be a home run. So that's probably worth doing. You know, that looks pretty decent for downside move.
Yeah, put a couple $100 on the table and see what it does.
Right? Exactly. Yeah, I like that. Put a star on that one.
All right, very cool, very cool. I just looked at they're a gold mining company, headquartered out of Chicago. I don't know where their mines are. Huh. So yeah, gold is their deal, and of course gold's down for the year, pretty. About a 45-degree angle on the chart down. Interesting that I forget the guy's name, but the guy that wrote Rich Dad Poor Dad, pretty famous author.
Kiyosaki.
there's an article today, and he is predicting the biggest market crash in world history, and you just got to go buy gold. That was his deal.
I don't like guys that say the biggest of anything in history. I mean, that's
yeah. I mean, if it happens, he'll look like a genius, and if not, we'll forget, right?
Yeah, but how many times do people say we're going to have a big, huge correction? They keep saying it, saying it. Finally, you get it, but they said it a year ago, 2 years ago, whatever.
Right.
You just got to go. If you're, I don't know, the way that I look at trading, it's more swing trade. So you just got to go with the charts, what they're telling you now, and I can't really look macro. It's just not. It's not. You can look macro on a few things, but I just try to look at what the charts are telling me right here and now.
Yep. Price and volume are the only realities. The rest is opinion.
Yeah.
All right. MOV.
MOV. Let's take a look at this. Huh.
Like a staircase, man.
Yeah, this looks pretty decent here. And I'm not Movado. I'm not really familiar with this one, but you've got kind of a cup here starting to form. You've got it's been pretty whippy, but it's still up at the top of this range and had that big breakout. You've got this island, you've got this gap. This is a bull flag. This, this has potential. This has potential. You can see it stair stepping up here, and this is kind of a bull flag. You've got it's kind of a neutral position here. It's still kind of churning sideways, but it could stay down within this to 46, and this thing still has potential for higher, move higher.
An interesting pattern, interesting chart. It's fun to look at. Today's volume was 67,000. That takes me out right there. Too thin. I don't trade low volume instruments. You can probably get in, but then when you want to get out, you might have a problem.
That's see what the options look like here.
I'd be surprised if they have any.
They actually do. Here's the monthlies. They're monthlies. Let's take a look at the September monthly here. You've got low volume, volume interest. So it's currently trading at $50. Yeah, very, very little open interest. You can see 68 contracts on the call side. So again, like you said, very, very thin. Spreads pretty wide. So not one that I would typically look to do, but it has potential directionally to move up, but the options aren't very good.
Yeah. Micron. Oh, then we're gonna look at GE. I'm looking forward to GE. Micron first.
All right. Yeah. Nothing here for me. If anything, would be a potential short. It's trying to kind of consolidate here, but it doesn't look good. You can see here it's tried to move back up and it failed. Again, here's that 618 retracement to me that's very, very key. So if we take a look here from that, let me redo these Fibonacci levels here. I'm just going to take them off. But you can see here it's just sitting under these moving averages. But there's support all the way down, so it's not one I'd probably be doing anything with. Here if it breaks through this level here at 50. Next support's down at 45. I could see this easily getting down to, anywhere from right. You can see all that support through there. So 49 down to 45. Just nothing I would be doing. I would not be buying it here. And it's just, you've got good support below. So even if you're going short, you're not going to have a whole lot of play there. So not much there for me.
Yeah, there was a pretty nice, here's a big impulsive move. This was 3, had a correction. 4, short 5, here was the target zone. It hit it. And then after you hit the target, you typically get an A, B, and then C. C is typically 1.5 times A. So I agree with the short, but you do have this potential support at the 200. So I really wouldn't want to take it until it broke that. And then you'd have to see if there's enough potential, and you got a prior low there. So there may not. Yeah, I definitely wouldn't touch a long on it under the resistance, and there's some problems with the short as well. So not a candidate for me right now.
Yeah.
GE. So this one's fun.
Yeah, let's take a look.
One of these days, right? One of these. I read an article when GE got delisted. So they're delisted from the Dow, and they looked back over the last, several decades and said, what happens to a company after they get delisted? And 8 out of 10 of them do really well.
Huh. Well, this is so beat up that it's so ugly that, this would be one that you definitely wouldn't want to short GE down here. I mean, they do have a lot of good assets. And if you just look at the chart, you look at the weekly chart here, this is a long-term play, not something I would be looking at, but you can see here it's down in this huge support area. It's, already knocked down. What is it going to go to zero? I don't know. I hope not. I don't hope that it doesn't go to zero and go bankrupt. But if I was taking any play on here, I'd be looking for this to probably start then moving back up. But it's, to me, it's kind of dead money here. So would not be looking to do anything until it started getting above kind of this moving average here, maybe 14.25, something in there. So, dead money. And then you've got all this major resistance above, so nothing there.
Yeah, I've been watching this for a long time, waiting for a bottom to get put in and maybe a short squeeze to get set up. If nothing else, right? If nothing changes with the business, but I just checked again. Short ratio is only 1.5, so you're not going to get a short squeeze.
No,
that's too bad. If they had a huge, short number, that could drive a nice little rally. But yeah, maybe, a bounce here, but there's no sign of it, no upward momentum. So yeah, I like your term dead money, right? You park your money there and watch it do nothing for now. Yeah, it's too bad. They were an iconic company. Jack Welch cannot be happy right now.
No, I know some GE guys and they're not happy. Yeah.
Yeah. No, it's too bad. They got a really, really great legacy. It's just, just has, kind of like Sears, right? What happened?
Yeah. Yeah.
They totally lost their mojo, right? Only way they can make money is selling assets.
Yeah. Their real estate. Yeah.
All right. We got time for one more and then we'll start our wrap up. And I don't think I've heard of this one that I recall. Sage, S-A-G-E.
Wow. And this is a high flyer, And
there was a clue that was going to happen too back in January. There was a clue, a little breakout before that big gap up.
So earnings came out, had a nice pop here. Let's see. Yeah. Oh yeah. So earnings for today had a good pop. So what was it? Wasn't up that much. Is that right? 2.5% or so. Gosh. These pharmaceuticals are not something I typically like.
You can get those big pops, but you can get the opposite.
Yeah, you get the pops the other way around too. So
get a black eye with the pop.
It's not something I would be looking to trade. But it could easily get back up here to 162 right here into that moving average. You got the 50 moving average here, 157, then up to 162. You put a fib level in and kind of get some targets here. So, from that high to this low, 160. Anyway, looks like it wants to probably push up just to squeeze any shorts, but not something I'd be trading.
Yeah, there was a gap back in December, probably on earnings or a drug announcement or something, and there was actually a clue that it was breaking out and getting ready to head up, and it doubled. It had a gap that doubled it from 80 to 160.
You can see last time here in May, man, it just flew to the upside. So it's got that potential to do that kind of rocket moves.
I'm with you on these pharmas, right? I like them, but you got to be really, really careful, and you got to have your risk control, to the next level, where if there's a huge gap against you, you don't get hurt too bad, right? So that limits the potential on your profit when you do that. But
yeah,
you got to do it. The only way to make 1,000% return is to bet the farm, and if you do that, you got to be willing to lose the farm, and I'm not.
Yeah, this is a real speculative stock. Look at these moves. See these spikes? These are big spikes. So if you're a high kind of profile risk taker, or you have part of your portfolio, this one be one you could play, but just realize the risk. I mean, look here, just in 2 days, it goes up from 144 to 180, 189. So this thing is some kind of driven on headlines or whatever, just whatever drug trials coming out, whatever. So it's pretty difficult one to go with.
Yeah. All right. Well, why don't we got pretty far down the list. We went through 11 symbols plus some of our own favorites. So I think we made good, did some good work here today. But if you got any final closing thoughts, Larry, a link you want to share, a webpage or something like that, that'd be
sure. Well, thanks for having me again. And come check us out, powercycletrading.com, powercycletrading.com. And you can click here see what's going on, upcoming events. I'll be doing a nice free webinar tomorrow night, actually on Wednesday, on different types of option strategies. So if you like options, come visit us and sign up for the free webinar. And I look forward to hopefully seeing you there tomorrow night. So thanks again for having me here, and look forward to the next one. Thanks, Dean and David, and y'all have a great rest of your day.
Okay, yeah, you too. That sounds like a good event. All right, here's my webpage, followmetrades.com. Again, I'm Dean Jenkins, and I have a stock advisory service. So the same trades I'm taking on my own account, I publish to subscribers. We got the long-term track record here, year on year. They're verified third-party CPA audit. And details of every single trade you can click going back several years. And a good way to get introduced is just to sign up for the free weekly newsletter where I do market analysis projections. So click there on that button and get a free newsletter every week, and get introduced. I hope to see you at some point in a future webinar or trading room or something like that. All right. Well, hey, it was fun to be here. Good stuff. It was kind of fun that we could go a little bit deeper with just two of us. And go ahead and turn it back over to you, David, to wrap it up.
Yeah, it was a good show. So thanks, guys. And just a reminder to everyone, please be sure to subscribe to Timing Research on YouTube and your favorite podcast network. Also, you can go to TimingResearch.com to get access to any of the show archives there. And both shows will be back next week. So Crowd Forecast News at the usual time of Monday, 1 p.m. Eastern Time, so August 13th. And the next episode of this show will be August 14th at 4:30 p.m. Eastern Time. And I just want to thank both of my guests again for this week. Larry Gaines of PowerCycleTrading.com and Dean Jenkins of FollowMeTrades.com. Thanks, everyone.
All right. Thanks, David.
Thank you, David. Thanks, Dean.